Hi, John. How are you?
I'm good. How are you?
Yeah, very good. Thank you. So, John, what is the difference between crypto CFD, crypto spot, and crypto perpetual futures? Can you please elaborate and explain us what does it really mean?
Sure. So, a commonly asked question by all of our customers and potential business partners. When we look at crypto spot, it's essentially the underlying crypto price, whereas a crypto CFD is a derivative of the spot price in the OTC markets, which means there's various market makers creating a price, and that is not necessarily a centralized price. Therefore, you have different structures, different pricing coming from different venues.
That's why it's called OTC, the market which is happening everywhere.
Correct. And it's not centralized. It's not a futures exchange. It's a over-the-counter. Every firm has the discretion to create market based on their beliefs. Perpetuals, one of the most important derivatives in the crypto space today. It has gained the most volume over the course of the last 1.5 years.
You are talking about crypto perpetual.
Crypto perpetuals, correct. And what it means is it's a contract that it doesn't expire. It has a dynamic of a funding rate, typically 2 or 3 times a day, depending on which partnership you're dealing with. And this is a product that has gained such a momentum. It has traded over a gain market share of over 62%, according to some statistics we saw from December onwards, which just tells you that there's more volume now being traded on crypto perpetual contracts than there is in actual underlying spot markets.
Because of what? Because of simplicity of the product, or maybe because the crypto perpetuals, it's pretty similar to the crypto CFD?
Yes, indeed. There are a lot of similarities between these two contracts, and basically you're using leverage, which is what most people like to consider an advantage when it comes to trading. We go back to capital efficiency. You can open a position with less capital than you would if you had to trade the spot market.
I see. Okay, and what is the difference between crypto perpetual futures and crypto CFD? Because there are some differences, right?
Absolutely. So if we look at the funding rate is being applied 3 times a day versus typically 1 in the traditional
swap,
which is
touch base in our previous video.
That's correct. So the swap is charged once daily, whereas in the crypto perpetuals space, you get charged 3 times. And to construct that funding rate, there is a unique dynamic. It's a formula. Now, each exchange or each provider has its own. But let's take one of the most commonly used. The funding rate has a component of an index. An index means there's going to be multiple venues pricing in, and that's how that price is constructed. And then they look at if the spot market deviates, then the exchange will apply your funding rate according to the deviation of the market at that given moment. So if you're long, you may pay the guys who are short, or vice versa.
So basically, sometimes I will be making some interest just on the opening position.
Of course, that's not.
It might be one of the strategy when I hedge positions. I go long on the spot market and I go short on the perpetual futures market.
And there are some ARB opportunities there. Of course, we always advise you to trade with caution.
Yeah, but in that case, John, I can make my revenue just by on this interest. Of course, if it's a positive interest on that positions, at that very moment.
Indeed. And you know what's the dynamic that I find unique in the aspect of perpetual futures? The funding rate is one of those things you cannot determine because it will be purely based on the deviation of the spot price against perpetuals and the order book or the portfolio of that exchange, whether clients are short or long.
I see.
Interesting dynamic, if you ask me.
Very interesting. Okay, John, thank you very much for the explanation about the crypto perpetual futures. But here is another question, and it's correlated. As you mentioned, on the Forex side, there is the definition as a swap, and swaps basically is creating by the central bank, by the interest rate that they apply to the prime brokers, to liquidity providers, then to the brokers, and then eventually to the trader. But when it comes to the crypto CFD, who is making decision about what should be the swap rate? Who actually make a decision?
Sure. So we interact as probably our company happens to be the largest wholesale crypto CFD provider in the industry, which means we interact with most of the makers in this industry. The answer to your question is each maker creates their own swap rate, their own funding rate in their own proprietary way. So there's no specific formula that we can share because it is at the discretion of each provider.
I see. Okay. So basically, as far as I understood, the broker for the crypto CFD use underlying asset, either crypto spot or crypto perpetual pricing.
Yes.
And when you use crypto spot, when you hedge your crypto CFD positions on the crypto spot, basically when you provide the leverage or margin, let's say 10% for the Bitcoin, it means that when you hedge this position on the crypto spot, you use your own capital.
Correct.
And that's why when you apply the swap for the crypto CFD instruments, you kind of try to charge that interest that potentially this user would be paying to the exchange if he was about to trade that amount of the on the crypto spot. So because you provide him a leverage, so basically he used your capital in order to increase his leverage.
Absolutely, and that's part of the, again, we call it the financing rate or the swap charge or rollover.
I see.
You are utilizing an entity's collateral to leverage that relationship. So that's one of the advantages and dynamics behind it.
Okay, so crypto spot, essentially, it's an exchange. When you need to exchange one asset to another.
Correct.
Basically, nowadays, most of the traders, they use the exchange. Okay, if they are going to sit and hold on the position, perhaps exchange is the best solution for them. Because there is no risk, there is no volatility risk, and there is no any kind of systematic risk when the exchange may collapse or just disappear with the fund. So that's why they can buy Bitcoin or any other assets and keep on their cold storage. But when it comes to the daily trading or arbitrage trading or algorithmic systematical trading, that's the crypto perpetuals or crypto CFD.
As I said, it's a new way of trading crypto. I remember years ago, everyone was heavily who got involved in the crypto space in particular, they were trading the spot market. Nowadays, it's the other way around. Most traders have become more interested in the CFD product itself or perpetuals, as you may know.
Cool. Okay, thank you very much, John. Thank you, guys, and we are welcoming of any your potential questions related to the capital markets. Thank you.
Thank you.